Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, those are latest visuals coming to you from New Delhi, where the Chief Economic Adviser Arvind Subramanian there getting ready to address the media and detail the findings from the Economic Survey 2018.
The Honorable
Let's hear him out.
Minister presented the Economic Survey for the year 2017 and 18 in Parliament today. The two-volume survey has some unique features this time. This and its highlights you will directly hear from the Chief Economic Advisor. It's my privilege to welcome you, Dr. Arvind Subramanian ji. We also have CEA's team on the dais. My warm welcome to Principal Economic Advisor, Mr. Sanjeev Sanyal, Senior Economic Advisor, Dr. Archana Mathur, Senior Economic Advisor, Dr. Arvind Sachdeva, Economic Advisor, Mr. Arun Kumar, Economic Advisor, Mr. Anthony Syriac, Economic Advisor, Shri P.K. Abdul Karim. Friends, first the CA will make a detailed presentation, after which the floor is open for questions. Please follow the points of order as usual. A humble request, please keep your mobile phones on a switch off or silent mode. Over to the Chief Economic Advisor.
Okay. Can you hear me? Good afternoon, and thanks to everyone for, first of all, thanks to Frank. Thanks to all of you for braving the traffic. Of course, it gives me great pleasure in showing off this year's economic survey for 2017-18. Okay. So something like this, as you know, cannot be done by any one individual or a group of individuals. And I'm presenting this on behalf of a number of people. And I'd like to acknowledge some of them. My apologies, I'm going to miss some. In fact, if you look at the acknowledgements page or pages in the survey, it's really quite long, and I'm sure it should have been longer, so apologies. First of all, I'd like to thank the staff of the Economic Division, my colleagues who are sitting here, my officers of Team CEA, as we call it. I would also like to thank very much the physical act of actually producing it. It takes a lot of effort. I would like to thank the coordinating unit, its head, and especially Aftab and Ashwini for really having seen the process very carefully. Lots of people who are not here have also contributed. Don't want to name all of them, but including some people in the US who came to contribute for this, to work for this. I'd like to thank them as well. I'd like to thank my colleagues who work with me, in the Ministry of Finance, especially the two that I work closest with, Dr. Hasmukh Adhya and Mr. Subhash Garg. I mean, one couldn't ask for better colleagues like that in the ministry to work with. Of course, I would love to thank my boss, the Honorable Finance Minister, without whom, of course, none of this could happen. His support, his guidance, the cover that he provides have just been amazing in making all these 4 surveys that we've done possible. So a very special thanks to him. Last but not least this year, I want to extend a special, very, very special thanks to a group of people who kind of don't get enough, I think, credit for the work that we do. In the last survey and in this survey, we've spoken a lot about how we use big data. And I'm going to show you this year as well. We've used a lot of big data to come up with new facts and evidence. But, we can work with big data only if we get big data. And we get big data, or we've got big data, thanks to numerous colleagues in government, you know, the deputy secretaries, the undersecretaries, the joint secretaries, the directors, you know, in their own quiet ways, they've been helping us enormously. And I'd like to thank two people in particular who are here. I want them to stand up, both for themselves, but also for who they represent. Mr. Nilendu Mishra and Mr. Prakash Kumar, please stand up. I'd like to thank, it's people like this who, you know, with their generous time, support and guidance, who make some of the work possible here. In fact, but for Mr. Kumar and his colleagues in GSTN, a lot of the work which I'm going to show you would not have been possible. Of course, the cover is pink. We just wanted to make sure that we too, in our own small way, contribute to, you know, expressing our support to the movement in favor of women and women's empowerment. In fact, there's a whole chapter in the survey on gender. So with that, let me quickly get to the economic survey itself. This year we have 2 volumes. We've gone back to the tradition. Last year we did it over 2 cycles. I think it confused a lot of people, and therefore we've gone back to 2 volumes. Volume 2 is, of course, the review of what happened over the last year, and in Volume 1 we build upon that to do some in-depth analysis and research and come up with new policy ideas. Overview of this presentation, I'm going to take about 25 minutes and then leave the floor open to questions. Frank, is that a good way of proceeding? I need to judge whether all of you are alert and awake. I don't want to bore you too much. So the presentation, it's in 5 parts: achievements, the analytical review, in particular understanding the temporary decoupling of the Indian economy. That naturally leads to the outlook for 2017-18, the rest of the year, and the next year, and the policy agenda. If I have time, I want to highlight some of the exciting new research that we've done that's presented in Volume 1. And I want to conclude with some big thoughts, maybe big and hopeless thoughts, but big thoughts nevertheless. Okay, what are the major achievements this year? I think that I would single out 2 or 3 very prominent ones. The launch of the transformational GST at the stroke of the midnight hour on July 1st. I think what is really important to take away also is the fact, as the finance minister said the other day or yesterday, that not only was it launched, and for something of such scale, complexity and scope, there were bound to be teething challenges. And I think it's fair to say that one of the remarkable things was, you know, the mid-course, the corrective, expeditious actions that were taken, which have led to a kind of stabilization of the GST. Second, I think that, as you all know, from the very first survey onwards, we have spoken about the twin balance sheet challenge, over-indebted firms or undercapitalized banks, which had kind of held back growth for a long time. We call that the twin balance sheet challenge. I think this year a series of really very important steps have been taken. The resolution that's underway under the IBC and the NCLT process. And of course, very recently, the recapitalizations, actually the details were announced. I think we think of the twin balance sheet challenge as having 4 R's, you know, recognition, resolution, recapitalization, and reforms. And I think we're now really well ahead on almost all of them. I'll talk about reforms in a couple of seconds, but I think these were very, very important. The binding constraint festering was the twin balance sheet challenge, and I think there's some decisive tackling of that's taken place. So, as validation of these achievements and recognizing India's medium-term prospects, I think for the first time in 14 years, India got the sovereign ratings upgrade. And of course, we jumped many, many ranks in the ease of doing business. So these were, I think, quite very important, even transformational achievements this year. As I said, in order to understand what is happening or what's going to happen in the rest of the year and the next year, we really need to understand what happened in the last, 4 to 6 quarters. And I think one way to think about this is to see why the Indian economy decoupled from the rest of the economy for about 4 to 6 quarters. As you can see that, for a period India was accelerating while the world was decelerating, and then from the middle of 2016 kind of the reverse process happened, and that is a bit of a puzzle, and we need to understand that why that happened to see what's going to happen going forward. I think this temporary decoupling happened. We explained that in the overview chapter for 4 reasons. First, I think there was this competitiveness impact from the 2 major policy actions, demonetization and GST. And you can see that, I mean, this is not proof, but it's all suggestive evidence that for about 1 to 2 quarters, you can see highlighted in white how exports decelerated very sharply and imports accelerated very sharply. So that was kind of some evidence that there was an impact from the 2 policy actions. Then, of course, beginning in the early to middle of 2016, our interest rates went up very sharply. See how we decoupled from the rest of the world. So interest rates affected demand. In turn, capital came in, strengthened the exchange rate, as you can see on the right-hand side. That also affected our competitiveness. If you look at the trade balance and the services balance, they were affected by that, and that also had a dampening effect on real activity. And this was, again, different from the rest of the world. That's why we kind of decoupled from the rest of the world to some extent. The 4th factor, which I'll talk about later, is, of course, oil prices. Also this year, oil prices went up. That affected consumption and the government finances, and that also held back real economic activity. So these kind of 4 factors contributed to the decoupling. And immediately you can see, therefore, what happens going forward. We see now that there is a robust and broad-based revival. I mean, several indicators of activity. We've shown manufacturing growth, GVA growth, even investment, exports, net private transfers, credit. They've all started to pick up. I mean, the direction is very good. The level is still below potential. Should keep that in mind. But in terms of directionally, the economy seems to be picking up quite nicely, quite robustly, and that's what's happening now. So in terms of the short-term outlook, remember that growth is picking up partly because the temporary impact of demonetization and GST have dissipated. Corrective actions have taken. I think the government is injecting a fair amount of demand into the economy. And above all, I think that exports have picked up quite briskly in the last 3 quarters, apart from that dip that I showed you. If you look at that same export chart and look at the last 4 quarters, you will see that Indian growth is about manufacturing export growth is about 11.3%, which is very healthy and kind of broadly in line with the way the world economy is going. So exports are driving growth. The temporary factors are receding. Private investment going forward will depend a lot upon capacity utilization and the progress under the IBC. Consumption, I'm going to come back, is going to be a little bit challenged because of oil prices going forward. So the growth projection, which all of you have already seen, for 17-18, it's 6.75%. It's higher than the CSO's estimate, in large part because the CSO has itself acknowledged that they weren't able to fully take account of recent developments. So I don't think they would be at all, they would contest this projection in any way. 6.75 on the real, and also inflation is higher in the second half than the first half, which they weren't fully able to incorporate. We project nominal GDP growth this year for about 10.5%. And going forward next year, because of all these factors, we think that growth will rise to between 7 and 7.5. You've, of course, seen the IMF and World Bank projections, so this is in the ballpark. Now, all projections, these are projections. They have a lot of error bands around them. Nobody is perfect. I think there's both upside potential, but there's also, challenges and risks that have to be factored in when thinking about this baseline forecast. Export growth could be greater. We find, for example, that exports are growing in line with world growth. There's a kind of a standard elasticity. But that is still lower than what this response of exports was in the previous period. So if export responsiveness picks up, export growth could be higher and overall GDP growth could be higher. And also, I think if the IBC process progresses well, expeditiously, if actions happen on time, if they're accepted without any glitches, then I think there is a chance that private investment, after so many years of languishing, could also pick up as well. But in terms of the downside risks, I think that we should all be aware of that. That there are factors that we should be very, very watchful about. If oil prices remain at current levels, I think there will be challenges. We know a rule of thumb, every $10 increase in the price of oil, GDP growth comes down by about 0.2 to 0.3%. The current account deficit will deteriorate by about, again, 0.4 percentage points of GDP, $10 billion. Inflation will be higher also by about 0.2, 0.3%. So I think we need to watch oil prices very carefully. That's a risk. Also, sharp corrections to elevated stock prices. Stock prices are elevated. I'll come back to that in a second. If something sharp happens, I think that's another risk we should. And, having seen emerging market experiences around the world for the last 20, 25 years, I think we should always be watchful when, the macro risks mount, when asset prices are high, that you get this emerging market sudden stall. There's a famous phrase, sudden stop of capital flows. But in India, I think we should worry not about anything serious, but sudden stalls in capital flows, because then macro policies will then have to be tighter. Then you get the classic dilemma between stability and growth, and then has all these consequences. So in a sense, and you can see oil prices 17, 18 this year, about 16% higher than last year, which have held back consumption. And the IMF forecast is for another 12% higher growth next year compared to this year.